The strongest stocks that have been taking us to all-time highs are now starting to falter ahead of earnings. Tesla and Intel not doing so well. And this is leading the best sector in the market, being semiconductors, to show huge dark pool activity, which we'll be discussing today. We've also got island reversals off the take profit targets. And of course, something we've been talking about a lot, an oil breakout has finally happened. First target has been reached, but if it does break through this zone, how bad is it going to get for markets? Let's discuss today. Well, welcome back everyone to the special weekend edition of the Markets Around the World. We're covering the macro, lead indicators, and the hottest charts together. We've been running this show for over 3+ years, and it's become one of the biggest on the internet. So if you want to get on board daily content, remember to subscribe and smash that like button. It was a pretty bad day for semiconductors on the Friday session, thanks to Intel. But over the week, there was something that started to rotate through, a movement into energy and more of a flatlining for many of the biggest stocks. And this has led the S&P 500 to hold its ground while the NASDAQ and Russell are starting to fall a little bit. Most notably, of course, Tesla was getting absolutely bashed, and we'll look at the key levels for that later on in today's video. But let's start with the big stat. We've been talking a lot about January, and of course, we talked about the Santa Claus rally and the first 5 days. Now, these were both negative this year, which usually is not a great sign. But January, the trifecta, looks like it's coming in green. That's okay and a decent sign for the rest of the year. So it really shows that if we do get the Q1 expected sell-off that we're probably going to have this year, then if we go through with a strong April, the most important month overall for the rest of the year, we should be looking at a pretty positive time. But, of course, what happens before then could be kind of wild. Let's talk about the things that are good and bad for the markets right now and try to break down some thesis here in terms of the theory that is happening in the macro world. First up, financial conditions. This is something we posted over on our X account. Links in the description down below. And you can see that financial conditions are now the easiest they've been in 2 years. So even though we haven't even seen a rate cut yet, it's actually easier to get money out there than it has been. We've also seen big revision changes for this year's earnings. The S&P 500 is down 11% in terms of EPS revisions. The S&P 493 is down 15%, and only the Magnificent 7 are expected to report well. You know what's happening this week? It's Mag 7 week. A lot of the big stocks are coming out. If they don't perform as per expectations, get ready for mean reversion on markets because it's going to be a wild time. We also have the M2 money supply here, which has started to accelerate again, kind of showing us that somebody in the back end is trying to support this market, even though it looks like we're at all-time highs and everything looks fantastic. And you can see here that the S&P 500, the number of stocks that are actually advancing continues to decline, while stocks overall are making a new high, which means that breadth is still pretty weak. And it's not really coming with this strength. What we've seen in the past is when we broke through to new high based on the Magnificent 7, we would generally break through and also see other stocks start to come up. The Russell would come soon after, etc., etc. And as we go through the charts later on, this time is a little bit different. What about the number of stocks with super trend? Well, super trend, a popular indicator out there, is also showing a decline as markets are rallying up. And a lot of this has to do with that breadth situation. Let's now talk about what's going on with election risk this year. You'd be surprised that already we're seeing October and September VIX futures exceed 2020 and 2016 in terms of volatility expectations. This is very interesting because, of course, generally speaking, the volatility comes in before the elections as people fear it. So usually it's that October-September period we tend to see spikes in the market, and we're already seeing a lot of hedging coming into that event. So let's now take a look at core PCE. Now on the surface, it looks pretty good. We're already back to 2%. This is probably going to be worthy of maybe getting a March revision rate cut. Now, we all expect that because, of course, that's what the market has now come to price in. But there are some concerns, most notably everything that's going on, of course, in the Red Sea and everything else. We're starting to see this knock through into costs. And because it continues to be an ongoing saga, we have these issues at hand. So what is going to happen next probably is a little bit more unclear in terms of whether we're going to get a March rate cut. The Fed's already been saying it's mid-year. What do you think in the comments down below, though? I'll do a poll for this. Will it be a Fed rate cut that's going to happen in March, June, or is it even going to be later on the year, September? Let us know with the poll that's coming out very soon. Make sure to subscribe if you're interested in checking that out. Here's another interesting one, IWM, the Russell 2000. The spot was up barely, but overall interesting. While the spot was moving up, we saw volatility spike up huge. Now, when we tend to see this, there is a little bit of connotations with it. Now, don't get me wrong, volatility can spike when calls are going through, but generally you see it happen when we're seeing puts and we're seeing fear in the market. So an interesting point there that's just worth noting for the Russell 2000. For longer term investors, should you be concerned if pullbacks do end up coming over the next couple of months? Well, the answer is probably not. I mean, the TOI 2-month here, which is one of the better reads for the year, which was from Wayne Whaley, basically states that we usually have a 35-2 win track record, with even the bears at the end of the year being relatively, you would say, like low in terms of not really making those kind of huge traps. Now, there have been some big sell-offs. Here we get one massive sell-off back in 1987, that flash crash. But by the end of the year, it's pretty much been bullish in a big way. And some of those years have been spectacular. So something to keep in the back of your mind. Could we be seeing sell-offs start to occur? Well, we've already talked about CTAs dumping their positions, being a bit of a go-to for a relatively good kind of pullback, one of those mild style or even more aggressive style pullbacks. And we are totally overbought from the CTA positioning. We haven't got a new read yet, but we did see a small drop come through last week from CTA positioning. Could this be the beginning of it all? Obviously with Qs down, which we'll look at soon, with unusual volumes, it's certainly something that we are watching on these charts. Let's take a look now at some other things that are going on. This is an interesting one, which is China call volumes exploding. Everybody's getting interested again in China, and we have seen some positive signs coming out of the market. Obviously, record divergence between China's stock overall performance and how the S&P 500 has been going. Arguably some cheap stocks there, and a lot of stocks that will benefit from AI improvements as well that really don't have any of that pricing in, which I think is something that maybe is being slept on by the market, considering we are between 70 and 90% down on some of the biggest stocks out there. We also know that even if GDP is dropping, which it is right now, then we overall can still see markets perform quite well. And I think there's a lot of efficiencies to be made by some of these companies. Hang Seng Index going into capitulation about 1.5 weeks ago. And as we know, this is kind of the period that we expect the weakness. Then overall, over the next 6 months, generally it is a better than coin flip for sure type of situation. We've got quite a lot of reads here, so it's not the first time we've seen such an event occur with pretty strong pullbacks. New highs happen in clusters. This is for the S&P 500. It's something that I would keep in the back of our mind. We have made a new high in the S&P. Even if we sell off here, generally speaking, when you make new highs, you tend to see a lot more new highs end up appearing. And this is, of course, for the bulls' favor for an election year where we've never seen a recession. We have had crashes, but we've never seen a recession come through on an election year. Will this be the one that bucks that trend, or is it just going to be pullbacks into more buying demand? It does tend to look that way, at least with the stats we've got so far this year. Here's, of course, the S&P 500 first 5-day stat with all of the reads before. And why we bring this up is because, generally speaking, it really leads into a first quarter bit of up, down, and all around. Now, we haven't seen any of that yet, but with two kind of major sells now on the Qs, obviously semiconductors starting to weaken with an island reversal, it's starting to look like maybe February and March are not so clear, especially if the Mag 7 doesn't live up to expectations. How does it usually work? Well, you can see for yourself, generally speaking, it's that first quarter you've got to be worried about, less so the middle of the year, and then, of course, that September, October, which we're already seeing Wall Street starting to place some volatility bets on that time. You can also see that S&P 500 performance during February tends to be actually a little bit positive and then really sells off the middle of the month, but that's in normal years. Got some other great stats here, the first one being Tesla. Now, Tesla stock traders have not been happy recently, and of course, we did just hit a 6-month low with a gap well over 5% in terms of the amount the market fell off. Now, in the past, Tesla has always had what we call elastic demand. Over the next 30 days, we've always seen a rebound. In fact, we've seen a rebound 100% of the time with the limited data that we have so far. And the median return's been about 18%. Tesla investors are going to be looking for that rubber band kind of technique. Now, if it doesn't come through, I think you've got to be starting to get a bit concerned about where the stock's really heading, because that means that people are not just inherently buying it up, and they're starting to get very concerned about the growth targets and ability for Tesla to hold up against the competition, which is obviously an EV. Now, what do you think? Again, let us know in the comments down below. Now we move over to puts. So it's interesting at the moment that there are tons of puts out there in the market, and a lot of them look like they're sell puts. In fact, Goldman Sachs has come out and said that it is the cheapest ever in their recorded history to buy puts for downside protection. Now, that's not selling puts, that is buying the put side. So it is damn cheap right now. Did we get anything out of the options market? Not really. It was a pretty slow options market. We obviously know that 4880's been a bit of a catalyst for the S&P. And of course, we still have that 4900 breakout, which is going to be a big deal. Here's what happens if the 4900 does get broken and closed above. We probably will move to 4950 fairly easily, and then 5000 obviously being the next big target. You can see here these lines continuing to get massive from the call end. And of course, we know already on the bottom end, there is a huge, let's say, risk warning that's out there that's probably got to do with all those sold puts. I also know that there are a bunch of exchange traded funds starting to come on that are all about options writing, options credit creation. You know how we saw that whole buy the rumor, sell the fact when it came to Bitcoin? We'll have to look at when all of those dump into the market, because of course this could be one of the big stories of 2024 so far. This earnings week though is massive. Do be warned. We'll have all of the expected moves in our next video, so make sure to subscribe for that. But of course, we've got Tuesday, Microsoft, AMD, a big one to be watching, Alphabet, Starbucks, so many big ones. Then we have Apple and Amazon and Meta. This is the biggest earnings week that we get hands down. And this time we've also got Apple in the same week, I believe, as Amazon and Meta. So it's going to be huge. It's going to be volatile. And Tuesday after the close and Thursday after the close are going to be the ones to watch. A lot happening this week. Ahead of all of this, though, what are we starting to see? Well, let's go through some of the dark pool activity. Dark pool big trade here. S&P 500, which is a 3-time SPY fund. Big trade coming up. Could that be profit targeting after somebody's been purchasing these levels? I'd say it's very possible ahead of earnings, getting rid of some of that leveraged risk. We can also see here that we have Q equal weight, and that only just reached back to the highs, a monster trade here. This is one of the largest trades we've seen in a very long time, and it's right at those peaks. Could it be a sell? Your guess is maybe as good as mine, but it does look like a technical level where you would generally see a sell, all ahead of earnings. Again, here's the 100 ETF for the S&P. This has 20% Apple and Microsoft. So over, I think it's 46% of the Mag 7. So again, a huge trade after a huge trade. Is that really a good entry point for a bigger trader? I guess not. Again, could be a sell before earnings. There's a lot of stuff kind of pointing towards that. And then, of course, we have the treasuries trades. We already know tons of trades have been coming through. If treasuries start to spike up again and they break through this level, I would say this is a great accumulation zone. So we're seeing a lot of large trades appearing. We don't know exactly what's going on with the price action just yet with treasuries. But of course, we did, I would say, we don't usually predict, but we did kind of see dark pool activity lead us to this point. And that means that if we do see a turn here and we get a lot of trades coming through, then that could be a very good positive. And of course, that would push yields down some more, would show a really weak market across the board. Let's move over to the options world. And I can tell you one thing, 2024 is all about options. Take a look at this. Average daily volume back above 40 million, 56% calls, 44% puts, 41.78, a big Friday here. And of course, 30% retail single leg investment. Now, there's a lot of unusual activity in terms of where we've been seeing these big 90-day kind of areas. Of course, Intel getting a lot of trades both on the call and the put side. We also saw a bit of trades into some of the big stocks. And you notice here that the S&P actually received a ton of puts into it. So that was unusually high in terms of spread across the board. It doesn't mean yet we're going to fall off, but the Qs certainly into earnings are going to be wanting to see that Microsoft, those Googles, everything else hold up. You can see here that the 1 day and the 5 day are changing. So 5 day performance, one of the worst sectors, one that we've been talking about a lot on this channel, energy, actually performed well. And congratulations if you've been following along with the oil kind of movement, not so much necessarily the stock, but more the spot. It did do what we kind of expected it to do. So that was nice to see that come through. A few defensives starting to come out as well. And we saw overall that semiconductors on the 5-day have not actually performed as well as you would expect. In fact, they've been dropping. And on Friday, they were the worst performing sector of the majors. Semiconductors down 2.13 with an island reversal spot sell. And then, of course, energy doing the best with agriculture and metals, all those inflation-based trades a lot of the time there, and some defensive. So it was a defensive day on Friday, there's no doubt, based on the trades we saw across the board. Let's now move over to everything going on. Central bank liquidity remains fairly stable, small upticks, but still underneath where it was at the end of 2023. S&P 500 obviously hitting that 4,900 many, many times. Then we move over to the US 10-year. 4.2, we know if we get past 4.3, things are starting to look very shaky in markets. It's probably going to be a bit of a catalyst, something worthwhile alerting yourself to. Treasuries, therefore, finding themselves at that support base, which we've seen trades at. Could this be the inverse head and shoulders, right shoulder here? If it does start to bounce through, we've already got some alerts set just above that 20 moving average, which will be sitting down at that point. So some big trades, some big volume. Obviously, Bill Ackman, we know, is still holding his position, and he's been pretty good recently. What about bonds market? A sell on the Friday, but realistically still within the range, so no real advances there from our bonds indicator. And of course, then we move over to some metals. So we've got Dr. Copper. Is that looking better off Chinese stimulus package? It certainly got some action. It hasn't got above 4 though. 3.95 to 4, a huge level for copper, and don't sleep on that one. It's going to be a big zone for it moving forward. You can see how often it's rejected this area. If it does get through, it could mean those trades are all on across the board. And we've already seen copper stocks doing quite well. We've spoken about them quite a lot in our Market Masters community, which is links in the description down below. Let's now talk about Dow Jones Transportation Average. So this is obviously a pretty big deal. We did see weakness on it. We then saw strength. It's failed to make a new high, and it just seems to be sitting around. Notably, volumes are up across the board. Now, usually we would see transportation average weaken if the market was internally weak. Similarly, we would see home builders also weaken. And a lot of people, I've been reading a few comments, a lot of people hate this one. I'm telling you, it's a decent read on the economy. And although we're not seeing anything yet, we have had, of course, what I would consider the beginning of weakness after what has been an epic rally last year for home builders. So this is a bit of a high. It's probably a UT based on a Wyckoff. And if we do see sell-offs down here and the market's still kind of sitting sideways, I'd say it's a canary in the coal mine for sure in terms of showing weakness across the board. Dollar index still holding strong, still finding buyers, still looking for 103.80 to 104 there. Let's now move over to gold. It's a pretty hard trade. I've got to be real. If you're just selling off the most traded zone we've talked about, that's been okay. 2015, technically where the buyers should be now, but it's shady at best. So I would say 2034, that's going to be a good one to 2060. So we're looking for that breakout. Sorry, 2038, 37 is what we're looking for on the closure. Let's move over to GDX. So GDX rejects the 20 moving average. This is gold stock ETF. And you can see volumes are up across the board. They're dropping a little bit more recently. And we did get a little island reversal here. So we're still holding that pattern, looking for gold to actually find some buyers. But then there's oil. And I've got to say, congratulations. A few people in the comments have done pretty well out of the oil trade. And it's been a slow burn. You know, sometimes they say good things come to those who wait. Now, it hasn't been, of course, the most exceptional thing ever, but we got the inkling that things were good around here. And of course, from that point, you've seen a 5.53%. We've also talked about 70.50 being where the buyers have been sitting. So a decent increase from oil, certainly the first target in terms of overall trade. Now, if we do break through this level, though, it could get a bit wild for oil, going up to 82 to 84 a barrel fairly quickly. So a level to watch, a big breakout. Take a look at this on the weekly as well. When you look at it on the weekly, it's a big closure. Back up in here. We obviously closed above the mean reversion as well, which is the 20 moving average. So it's kind of signaling that oil might be getting a little bit of concern here, finally, from the situation that's going on. A lot of people speculated it was going to happen up here. We were very short on oil at that point. But down here, we've obviously moved towards that bull side, even though the trend's been horrendous because we started to see those signs. So pretty good on oil and obviously looking for that to ideally break out this take profit zone. Let's now move over to Tesla, most traded zone of over here. And overall, I would say it's an interesting level. No structure build yet, so we'll be looking for structure. and we kind of see a possible return back to the 164s. Now, I think a lot of long-term and Tesla investors will really like this level. This is going to be a huge zone for it. At the moment, I'm sure credit sellers are looking at Tesla and starting to say, well, is there some opportunity here? Obviously, out of earnings, one of my favorite things to do has to do with credit selling. It might be one of the worst times to talk about it, though, because credit selling has become so popular in the last 12 months. But yeah, it's been something I've liked for a long time. And of course, each earnings period offers opportunities. Let's now talk about 700, which is Tencent Holdings. Now, this is one of the generally better Chinese stocks, and it's holding its own. It hasn't broken out of the descending channel yet. But the reason we're bringing these up is because we're starting to see a little bit of this trade concept go through the markets. Obviously, BHP here, you might think, what's an iron ore company got to do with it? Stimulation coming back into China ahead of Chinese New Year. And of course, that leading into island reversals to the upside and some strength coming into a few of the iron ore companies. So certainly something we're looking at on the charts. Hang Seng Index as well, moving into capitulation, big volumes coming through here, breakout, and obviously a lot of room to go up if it does choose to do so. If you actually take a look at the Hang Seng Index, it's so low. It's back all the way to, I think, 1996 prices. But yeah, there's an interesting kind of storyline appearing there. Let's now move over to the markets around the world. We'll go to the US 2K straight up. So I want to talk about the US more than anything else. And really, we have rejections here on the Russell. Now, we know that it's been volatility up, and then stock price has been flat to up. So there's a lot of internal volatility starting to appear on the US 2K. We kind of think that 1930 could have buyers in it, but how big is this alert just above? We've got now 1, 2, 3, and 4 rejection wicks. If we close above there, get ready for the squeeze, guys. I think it's going to be a pretty serious squeeze that could come off this high break. At this point, though, things are starting to look weak, back down to 1936 or even worse. And one thing I'm looking at now, this has nothing to do with the IWM risk, but of course, we're looking at VVIX this week as well. Last time we got a spike in this, we ended up seeing a sell-off in the markets a little bit, and then we're looking for another spike up in it. So VVIX, something to be watching this week, the volatility of the volatility. It's getting ridiculous in 24, how many different techniques we're going to have to use. Used to be just simple, use the VIX, you kind of get it down to levels, you look for it. Now you've got to really go inside these internals. Let's now move over to the Mag 7. Speaking of internals, do we see weakness here? It's not great. There's a lot of long leg dojis and stuff. So we've got 1, 2, 3, and 4, and 5 in terms of the dailies. That's showing you that the market is like, question mark, what's going on? Now, it could be that it's sellers because, of course, on the Qs, that's an island reversal down. Now, we've been talking a little bit about island reversals right now because we've got an island reversal on the Qs, and of course, we have an island reversal on the semiconductors. And the thing about the semiconductors is we theorized together that this was the flag breakout take profit zone. There was literally this length here extrapolated out. Now, that's pretty wild because it actually hit it to the T, then started to sell off. We also saw NVIDIA hit just above that 600, which is a pretty big target. And then that's, of course, started to weaken. So it is potentially semiconductors showing us that they're a bit exhausted at these highs. We've got a huge rejection week. We've obviously got the island reversals. For a lot of bears, they're going to be saying, you know what? Well, I've been maybe getting flogged a little bit recently, but it's a very interesting level for them. And of course, enhanced kind of big dark pool activity and some big volumes coming back in. An interesting level indeed for that. NASDAQ across the board hasn't broken below 17,300, which is obviously more where the swing traders sit. But the first signs are there when you look at the real market trade. And as we mentioned kind of in this video, in the previous video, we talked about the idea that there's been quite a lot of rally ups with sell-offs during the day, which is, again, not what I like to see if we're going to hold the highs and make new highs. And the same thing's been going on in the SPX. So let's have a look at that one together now. And we'll load up the SPX. And you can see here that on the daily, it's been a lot of kind of flatlining, rejection wicking around 4,900, all sorts of things going on. Now, when you see too many reds, it's usually kind of a little bit of a negative initial sign. This is 4,900. We know how big a key this is. Is the trend still up on the S&P? Yes. Is it still intact? Yes. Is the NASDAQ starting to look weak? Way weaker than the S&P across the board. If we breach through 4,900, do we still expect 4,950 and 5K? Yes, there's nothing really that we're going to change there. So it's really just I would say the Russell and the NASDAQ and more these earnings that's going to push it through. And that's what we're going to have to be watching very closely. Let's take a look at the futures now for the S&P, and you'll notice it continues to make a series of higher highs. We actually just tipped a new higher high, which happened here on the Friday. So do we see a close under 48.50, 48.46? That's going to be a big deal for swing traders. And up until that point, technically the bulls are in control. So that's something that's going to need to be considered. Now let's move over to Bitcoin. So Bitcoin saw a break low. Obviously, a lot of people talking about the Wyckoff, us included. And then the market has closed, well, not closed yet, but it's got a big rally on it here. A nice looking bullish candle. Now, if we scroll over here, we can see that we're back to that 20 moving average and almost tapping the most traded zone, which I've got sitting here at 42,650. Now, this is a big level for it because as we know, 42 to 43K, if the bears are going to return, if you're a bear for Bitcoin, this is going to be that zone. And we kind of speculated that we might be seeing this pickup, and a lot of it had to do with that breach of the high. Now, I would have preferred, this would have been sweeter, if it did this and then that. And then if that had happened, it would have been a really great trade because the risk reward would have been really super worth it. But 42,000 kind of gets hit, and you can see here that we're sitting around that level. I'd expect a little bit higher before we see weakness across the board, and you're looking for structural build. So maybe we get some movement here, higher, lower, and then we start to see sell-off. Now, if that occurred, of course, the bears are in control. If the bears get pushed through 43.5, though, I would say that at that point, it's actually going to make probably a new high. So Bitcoin could be on for some interesting stuff this week. Now we scroll over here to everything going on, including the big week ahead, which does have some big news in it. You can see here all of the places around the world and what's going on. Then we've got the federal funds rate, though, coming in. So, of course, will they cut rates? Unlikely this week. FOMC statement and press conference, they're going to be volatile Wednesday, January 31st. And then we scroll down here and we get to the most annoying news because it goes one way and then the other, which is non-farms. Now, it is expected this week that we'll jump on about 177 with unemployment rate actually rising up to 3.8%. I would say this is going to be a huge vol event. And I often see with the non-farm payrolls, it often goes in one direction and then the opposite to grab liquidity. So be careful out there this week. Make sure to subscribe to the channel if you're interested in finding out more. And of course, we'll be following all of this news together and all of the price action more importantly. Have a great weekend, everybody, and bye for now. See ya.